1/3. That is how much deliverable silver has disappeared from COMEX registered vaults since September 2025. Not eligible silver, not total inventory. Registered silver, the only metal that can actually be delivered against a futures contract, gone. 1/3 of it. And while that drain is happening in New York, Shanghai is paying $8.23 more per ounce for the same physical metal right now. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. The vault drain and the premium do not exist separately. They are telling the same story. Let's get straight into it. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Lead story today. CME Group COMEX registered silver warehouse stocks. As of this week, registered silver stands at approximately 77 to 80 million ounces. That is the deliverable pool, the metal with an active warrant, the metal that settles a futures contract. That number peaked in September 2025. Since that peak, 33% of it has been removed, not reclassified, not moved to eligible, drained. At the same time, total open interest across all COMEX silver delivery months represents 550 to 575 million ounces in paper claims, 78 million ounces deliverable, 550 million ounces of paper claims against it. The coverage ratio sits at 13 to 14%. The CME Group data defines stress territory as below 15%. This market has been below that threshold for 6 consecutive months without recovery. The timing is what deserves scrutiny, not the inventory level alone. The timing, 6 months, sustained, no recovery. Think about what that sequence actually means. The ones paying attention already know what to watch next. Before I show you the full data picture, consider this. In a single week in January 2026, 33.45 million ounces were removed from COMEX registered silver inventory. That was 26% of the entire deliverable pool. In 1 week, per CME Group daily warehouse reports. The data is already telling you something. Let's build it out. Now let's build the full picture because the vault drain does not exist in a vacuum. The World Silver Survey 2026, published by the Silver Institute and Metals Focus, confirms 5 consecutive annual supply deficits totaling 762 million troy ounces. The 2026 projected shortfall stands at 46.3 million ounces, the 6th straight deficit year. That cumulative drawdown is structural. It does not pause for a quiet delivery month. The Shanghai Gold Exchange, the world's largest physical precious metals exchange, operating under supervision of the People's Bank of China, is simultaneously pricing silver at its morning benchmark fix of approximately $82.11 per ounce. COMEX Western Spot sits at $73.88. That is an $8.23 premium, 12.8% above the New York paper price. Per Find Bullion Prices data sourced directly from SGE benchmark fixes. London silver lease rates, the cost of borrowing physical metal for short-term delivery, have remained elevated alongside the COMEX vault draw. When lease rates and the Shanghai premium are both elevated simultaneously, the physical tightness is not confined to one region. It is a global structural condition. The rate of drain is not slowing, it is compounding. The ones who were called alarmists for flagging this coverage ratio 6 months ago, they are not saying much right now. And here is what makes that picture even harder to ignore. The World Silver Survey 2026 projects the 6th consecutive annual deficit at 46.3 million ounces. China controls an estimated 2/3 of global silver refining capacity. Yet Chinese buyers are still pulling metal from Western COMEX vaults and paying a 12.8% premium to do it. At the same time, COMEX open interest has not collapsed. Paper claims remain at 550 to 575 million ounces. That is not a contradiction. That is the setup. A physical market draining from the bottom while paper claims remain stacked at the top. And before anyone takes that as a green light to size aggressively, setups like this can take a long time to resolve. Months, sometimes longer. What this tells you is the structural picture. The timing is a completely separate question. Anyone who claims to know the timing is selling something. Here is the number most people are not talking about. 25%. That is the share of global seaborne oil trade that transited the Strait of Hormuz in 2025, per the International Energy Agency. That strait is now effectively closed by the US-Iran conflict. Now, the Strait of Hormuz, because this is no longer a backdrop, it is the primary variable. U.S. forces are actively escorting vessels through Iranian-contested waters per Reuters and CNBC reporting from May 4th and May 5th, 2026. Iran struck ships and set a UAE oil port ablaze. Brent crude has surged more than 50% since the start of 2026, currently trading above $100 per barrel. The U.S. 10-year Treasury yield sits at 4.44 to 4.46%, its highest level since July 2025 per Trading Economics, driven by energy inflation expectations, not growth. The World Bank, in its April 28th Commodity Markets Outlook, projects energy prices to surge 24% in 2026 and precious metals prices to rise an average of 42%. Markets are still pricing a contained conflict resolution. Look at a DXY near 98, a 10-year yield at 4.46, and oil above $100. And tell me what probability you put on that assumption holding. Every time an energy supply shock of this scale has hit global markets, non-yielding real assets have repriced higher on a 6 to 12-month lag. Gold reprices upward, silver reprices upward, with leverage to the move. That is the historical pattern. It has not been different yet. Silver Western spot at $73.88. Shanghai Gold Exchange morning fix at $82.11. $8.23 premium, 12.8%. The short-term picture is binary. Friday, May 8th, brings us April non-farm payrolls. Consensus sits at approximately 60,000 jobs added, down sharply from 178,000 in March. If NFP prints below 40,000, rate cut expectations reprice, the dollar weakens, silver targets $80 and above. If NFP beats at 100,000 or more, the Fed hold narrative strengthens, yields push higher, silver tests $65 to $68 support. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture on the lower timeframes right now. I cannot tell you what silver does tomorrow. Nobody can. If you think you know, good for you. This is a binary event week sitting on top of a live geopolitical escalation. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore is the one that will cost you. So let's run both. The bear case is real. Dollar index at 98 provides conventional headwind for dollar-priced metals. The 10-year Treasury yield at 4.46%, highest since July 2025, reduces the relative appeal of non-yielding silver. Silver fell 3.5% on Monday alone as the dollar firmed on Hormuz escalation news, per CNBC May 4th reporting. The bull case is equally real. COMEX registered silver coverage ratio at 13 to 14%, below the stress threshold for 6 consecutive months per CME Group data. Shanghai Gold Exchange premium at 12.8% confirms physical buyers are already paying above paper price. World Silver Survey 2026 projects a 46.3 million ounce deficit, the 6th consecutive annual shortfall. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. Everything shown today points to one thing. The structural pressure is already built. The vault is already drained by 1/3. The premium is already 12.8%. The sixth deficit year is already projected. The only question is when the paper market catches up to what the physical market already knows. Don't take my word for it. Verify every number I gave you today. Check the data yourself. CME Group Daily Warehouse Reports at cmegroup.com. The Silver Institute World Silver Survey 2026 at silverinstitute.org. Shanghai Gold Exchange Benchmark Data at en.sge.com.cn. Logic over hype. Always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. OG John AG 1.0, out.